All right, welcome back to Remote Work Bay. I have a very special guest with me. Thank you, Stefan, for being here today. How are you doing?
Fantastic. Happy Friday.
Well, do you want to tell everybody a little bit about yourself and share your story?
Sure. So my background is I'm a certified public accountant and I'm also a real estate developer. So I run two practices. One focuses totally on tax advisory, tax consulting, tax compliance, and general sort of financial advisory and consulting as well. And on the other side, we're also real estate developers. So we have a company where we build apartments from the ground up all over the city of Los Angeles. They're typically 3 or 4 bedroom type units, and there might be it's all infill development. So it works out to be like maybe 4 units on a lot or 8 units, just depends on whatever the zoning allows us to do. So that's kind of my background, and I am primarily focused in real estate and tech. My background is actually real estate accounting and finance, and then kind of naturally progress and just actually building out the real estate as well. Mm-hmm. So that's kind of a little bit about me and what I do.
Considering how hard so many industries were hit this year, how do you think it's going to affect the trends of tech and real estate in the next year and the coming years?
So it's a really big question. I mean, there's some obvious types of real estate that I think everyone knows is going to be kind of hurting for a while. The obvious one being office, right? So no one really wants, or I don't know if people really want to be in the office or not. There's good and bad to being there, but there's definitely a lack of interest in moving back into the office, considering that people are starting to wake up to the fact that there's so many wonderful ways to work remotely with teams that you don't have to be in the same office to do it any longer. Obviously, also, everyone knows that there's this huge trend where everyone's leaving all the big cities. They're leaving San Francisco, they're leaving LA, they're leaving New York, and they're going to smaller, more affordable cities where they can get just a whole heck of a lot more house for their money, which is great. The question is whether or not that's going to be a long-term trend, because, hey, it's nice to be there when you can't do anything during a pandemic. But when things start to reopen and you're making a good amount of money as a tech employee, are you happy being in a smaller city, or would you rather move back to the larger city? So my personal feeling is they're coming back. We're going to see them coming back to LA. We're going to see them coming back to San Francisco, because that's where a lot of really interesting restaurants and nightlife, dining, and all that is. But maybe I'm wrong. I don't know. But I'd see those as the major ones, and obviously the other types of real estate, like industrial, are just crushing it right now, and retail is like.
I was going to ask, like, what do you think is going to happen with all the retail and commercial real estate? Like, what's going to become of these buildings?
Yeah. So. A lot of talk seems to be around that offices will end up being converted into apartments because they have very efficient floor plates, and you can repurpose them to either condos, or maybe they become affordable housing down the road. But that's going to take some time, and the owners are going to have to they're going to have to see a lot of the leases burn off of these offices first before it starts to you start to see a play where it makes sense to convert into apartments. But that's probably where a lot of the space is going to be. It's going to be turned into housing, because we're still very short on housing overall.
That's definitely necessary in a city like LA.
For sure.
Have you seen a movement there within our own city? Are they converting retail spaces into housing?
It's too early. It's way too early right now, because we're still kind of in the beginning part of this. And, a lot of lenders are working with the owners right now. They're holding off on collecting the mortgages, or they're kind of pushing it back. But I think once you start to see this whole pandemic event over, you're going to start to see a huge kind of shake up in the market. Right now, things are still sort of on ice at the moment, but you're already seeing some areas, like LA is not a monolithic city. There's some portions of LA which people are dying to get into. They're moving to the beaches. They're moving to they're moving east towards San Bernardino. They're moving to the Valley, but they're not moving they're moving out of Hollywood, and they're moving out of downtown. Like, it's a ghost town right now if you go in those parts of the city. So
that's true. So let's just say, I'm looking into investing in real estate. When is a good time to invest right now? Because it seems like housing prices are still pretty high in a lot of the desirable places, like you said.
Yeah, it depends on what your objective is, I would say. So if you're looking to buy a home, timing the market is going to be tough, and it feels like we have a lot more room to grow in the housing market, because as long as the Fed keeps interest rates at very low levels, it's going to continue to prop up the housing market. If you're thinking about buying a home, my recommendation would be that it's not really an investment decision. I know this sounds a little bit sacrilegious. It's more about what fits your needs, because homes are not typically a great source of wealth building, in my opinion. I mean, you could put your money in the stock market, you can put it in investment type properties where it would generate income, and you would do a lot better off than a home. As it relates to multifamily, maybe you're looking to buy a rental and all that. It might be a good time now, to be honest with you. I mean, there's an argument to be made that inflation may be a huge problem, and you sitting on a bunch of cash is not a good idea. And it might be better to put into a hard asset like real estate. Timing is one thing, and then it's just another is location. So, I mean, there's other parts of the country are just doing absolutely phenomenal right now. I mean, Texas and Utah and Las Vegas, I mean, they're going gangbusters. So if you're thinking about buying out there, it feels like it'd be hard to go wrong over in those type of markets.
I was just talking to a buddy of mine who's getting rid of his warehouse space in City of Industry.
Oh, wow.
And he was looking at just warehouses in Vegas, and it's more expensive to rent a warehouse in Vegas right now, which is mind-blowing to me. It's absolutely mind-blowing. I wonder why that is the case. I don't know if it's Californians moving out to Vegas or Nevada in general that's driving all the real estate prices up or rental prices up.
It could be. I mean, Nevada, like Las Vegas, is growing leaps and bounds. I mean, everybody is just moving over there, and the city is like, I think there's at least 2 million people now in the city. And if you think about where they were even a decade ago, it's like, wow, I mean, that city is just really blown up. So maybe, I mean, that might be the case, that there's some case to be made that there's a lot more upside potential in Vegas. And so stuff's trading at a much higher price. But I'm a little surprised. I'd figured that it'd be more expensive out here. City of Industry is really prime industrial type space.
That's what I would think too. Maybe he needs to do a little more research.
Yeah.
Yeah.
Maybe they're like, hey, you Californians, we're gonna take advantage of you here. It's worth a lot more than your California properties. I don't know.
That might be the case.
Yeah.
I mean, so I'm very interested in your take on the general migration of people, and also, with people now being able to work remotely, do you think that there's some type of trend of people just not buying houses and just renting or hopping around from rental to rental properties just because they can right now?
I don't see that as much. The end game or the goal is everyone. I don't say everybody, but most people want to buy a home. They want to actually get a great place and make it their own and customize it and all that. So rentals are like what you have to go to if you can't buy.
Yeah.
But it's generally not my experience, but at least in the people I'm knowing and all that, it's not the preference. The preference is to buy and own your own property. And ideally these days, a single family home of some sort with some kind of degree of separation between your neighbors. No shared walls would be nice. Maybe like a backyard would be wonderful as well. So I don't really foresee a trend of moving around apartments and all that as being the hot thing. That might be more out of necessity than actual desire. Got it.
Yeah. And then in terms of diversifying investments, because we all know that's really important. What is your personal ratio of where you divvy up your investments, and what is your recommendation for say someone that knows nothing about investing, right? Like, how would you divvy that up? Where do you even start? And maybe, if you've already been investing, what should someone that's a little bit more veteran do, with their investment portfolios?
So I think it depends on what stage and where you are as a investor. So I think if you're a self-employed individual, the best investment you're ever going to make is actually your own business. You put in $1, you'll probably get 10 times your amount back, right?
Right.
And what does that mean? I mean, it doesn't necessarily mean go out and spend out a bunch of money on Facebook ads or whatever it is, right? It might be like education. It might be getting an additional degree. It might be getting training of some sort, right? Because maybe if you're selling services and knowledge, then that's the best investment you can ever make. The more you know, the more of a premium you can command.
Mm-hmm.
Outside of that, honestly, I'm not a wealth manager, so I'm not very good at selecting stocks and bonds and all that. I hate the stock market with a passion because I always lose. So I know some people are just crushing it. And every time I tell them what to pick, they choose it. They make a ton of money. Anything I pick. I think actually my best investment strategy for anybody who's watching is find out what I'm going long on and go short on that one. And you'll do phenomenal. I mean, you will absolutely crush it. But I'm primarily in real estate. So I'm primarily a real estate developer. Like the overwhelming majority of my portfolio is in landed buildings. So that's how I do it, but it's also my business, right? So that kind of makes sense maybe for someone who's employed at a company, some mix, maybe like 30-40% in stocks, 30-40% in bonds. The rest of it might be in cash. And if you can do real estate, that's great. It's just a very capital intensive kind of deal. It's very tough to invest small unless you buy like REITs or you buy into like partnerships, syndicated partnerships for real estate. So those bear different degrees of risk. That's my take on it, but I'm not the best investment advice kind of guy. I'll tell you that right now.
Okay, well, going back to real estate then, how about investing in real estate abroad? Do you have any advice on that?
So when you say abroad, do you mean within other states? Or
no, outside of the U.S.
Outside of the U.S.
Yeah. Do you do any international investments at all, real estate wise?
Yeah, we don't. We have kind of been interested in that a little bit. I think the key, I think, whenever you're investing, I view as abroad as just outside of your geographic area. If you can't drive to it, it's abroad to me.
Yeah.
And so no matter where you are, it's there's a consideration that you need to have like a local connection or local resources available to you. So maybe a property looks interesting from a yield perspective that's going to throw off a lot of cash flow, but real estate, for example, is not a very passive activity. People think you just buy it and then it just runs itself and the building heals itself whenever it gets damaged. And the property taxes pay for themselves and nobody comes in and damages your building or whatever. So that's not the case, right? And so it's actually requires quite a bit of management. And if you're buying something small and a place you can't drive to, it's going to be very tough to manage because very few professional managers want to work with 1 unit or 2 units. They probably want to work with 30 or 40 units. If you had a portfolio, then you have scale and then you're able to properly utilize resources. So my recommendation is you probably don't want to invest internationally unless you're able to achieve scale, because otherwise I think you'll find it to be not worth it. The investment outcome won't come out the way you expected it to.
Right. And so it's the same thing with even just outside of your general region, because
exactly. I would say if you can't drive to it within a couple hours, it's outside of your region and you're going to struggle to keep your real estate investments performing well.
Right. And then in every state, there's probably different legalities, right?
Oh yeah. California is really tough to work in, for example. So, we have there's a lot of rent regulations here, right? There's a lot of rent control. And then it's very tough to get permits, at least in the city of LA, to do anything, if you want to do any capital improvements. And there's business taxes on top of that. And there's a whole lot of compliance to kind of stay above. So there's other states that are more friendly and will probably be a little easier to work with. But then the degree of expertise that's out there too may vary as well. So you may not be able to get the best property managers to manage your remote property, which is a problem.
Is rent control a California thing, or is it across the country?
No, there's a few states that participate in it, but it's not across the country. So most of the United States actually bans rent control. California is one that believes rent control is a good measure. I will strongly disagree with that for a lot of reasons based in economics.
Could you explain what that is for people that don't know?
Sure. So rent control is basically it's a government restriction on how much rent can be increased year over year. So, for example, in the city of Los Angeles, up until the point of COVID, the most that a landlord could raise in a rent-regulated building, not all buildings are considered to be rent stabilization ordinance, like it's under that purview. The most they could raise is 4% a year, right?
Interesting. Okay.
So if the market is 10% that year, I mean, we saw huge leaps and bounds in the rental market in the past decade. These guys were sitting there watching their buildings go 4% a year. Well, actually, before that it was even 3% a year. They just raised it to 4%. So they're watching, their units basically not increasing with market, and all the buildings that are surrounding them that are market rate units are increasing, 5, 6, 7, 10% a year annually, because the demand's still there. So it's tough because, if cost increase higher than your rents, you're slowly getting underwater every single year. So there's no cap on how much repairs can cost. There's no cap on, but there's a cap on property taxes in California because we're a little different because we have a Prop 13. But there's no cap on the other costs, right? So you could potentially be making less and less profit every single year in a rent regulated situation.
And what designates a building or a house to be rent controlled?
So in California, no building, with exceptions, which we can go into, but no building past 1990 that's built newer than 1995. So 96 till now, right?
1990. Okay, I see. So
it has to be older. It has to be old. Yes, that's a better way of saying it. Sure. So it has to be older than 1995, can be rent regulated. Doesn't mean that they are all, that's the case. So cities then have the right to impose some sort of rent stabilization ordinance on those buildings. In LA, actually, we have it up to 1979.
Oh,
Yeah.
wow.
Or is it 78? I can't remember. One of those 2 years, 78 or 79. But that doesn't mean that new buildings can't be rent regulated. If you tear down a existing rent control building and then replace it with a new building, those units will come back as rent stabilized.
Interesting.
So you might have new buildings that are under the rent stabilization ordinance.
And how are they selected to be rent control? And can they ever not be classified as rent control units?
So
forever?
If you're pre-79, if you're a 2-unit building, so single family homes are exempt. If you're a 2-unit building, then you're rent stabilized.
Ah, interesting. Yeah. I had no idea.
Yeah. And there's only a few cities in the state of California that I can think of off the top of my head that actually have rent control measures. So San Francisco being one of the big ones.
Yeah.
Los Angeles, Santa Monica, and West Hollywood, and Berkeley. I kind of put them in a group because they had very, very restrictive rent control measures that made it pretty much impossible to raise your rents, or very little. So those are a few of the cities, but most of California actually does not have a rent control measure in place.
And this was the proposition that was just on the ballot, right? The 13, Prop 13, was that the one you're talking about?
So Prop 13 actually was passed in 1979, and that restricted the amount of property tax increases that any property in California could have. So normally most states, they will reassess your property value based on fair market value. Mm-hmm. So if your building's worth $1 million, then it goes up to $1.2 million, they'll tax you on $1.2 million. But in California, they can only increase your property taxes by 2%. Mm-hmm. So you have a building that's $1 million, then you bought it $1 million, let's just say, and then 20 years later, it's worth $5 million. But if you start adding 2% to that, you might have a tax basis of like 1.4 million, something like it might be way lower. Mm-hmm. And so then you'll have this situation where you have an owner who's been in the building for 20, 30 years, and someone who just bought it, and this guy is paying a ton of tax and this one's paying nothing, even though they're right next door to each other.
That is so fascinating. Okay, yeah. So what is the proposition I'm thinking about?
Might have been Prop 15. So they were going to roll back an element of Prop 13 and basically say, okay, if you're a commercial building, then we will reassess you at fair market value. Whereas if you're residential, so apartments and single family, then we will not.
It was a big prop in last year. On last year's ballot.
Yeah, right. And it narrowly failed. I think in a different environment, it might have passed. If we didn't have COVID, I think it would have definitely passed.
Right. So what is the situation now? So I know there's it's essentially, if you're a tenant, right, in this last year, you can't be kicked out if you can't pay your rent. What's going on with between tenants and renters right now? Not renters. So renters and owners.
Got it. So at least in the city of Los Angeles, we have an eviction moratorium. So you can't take any eviction action to remove any tenants from a building.
And when does that end? And
So I think it's up till June or July right now. They just extended it, and they're probably going to continue extending it until the pandemic's over. And then at that point, if you're a tenant and you haven't paid rent, then I think you'll have a year, and then you have to start making payments unless they change the law again. So that's the current law right now. It's constantly changing, and you're on the hook for it no matter what. If you're not paying, you might have to pay it later.
Once June hits, you could be kicked out of the property if you're not paying.
Correct. So they can start to take eviction actions, but the eviction courts are going to be slammed. So it's going to be, if you filed an eviction case as a landlord, it would probably take months and months and months to resolve.
Interesting.
Yeah.
Okay. Yeah, because they had originally, I think they had said it was going to end in December 2020.
Oh yeah, they're going to keep pushing it back. There's no way it's going to end anytime soon.
I was hearing this for a similar case for mortgage deferrals as well.
Yeah.
And that's, so now that's being deferred. You can defer it up to summer as well.
Yeah. I'm actually not familiar with the mortgage side. I couldn't tell you exactly. I know on the renter side, that's kind of where we're at. But they're probably going hand in hand, if I had to guess.
Wow, that's super interesting. It'd be interesting to look at the last recession and how that affected just, the renter buyer market,
Well, we had a different market here too back then.
Mm-hmm.
Rental was way more affordable during the last recession than this time around. We're extremely short on housing, and we need to build a lot more units to bring rents down.
Mm-hmm.
But we can't anymore. It's just tough to do so, especially at least in LA. It's extremely difficult to get any housing of scale in the city without going through numerous amounts of regulatory hurdles.
Why is that? Why is it so difficult?
There's no political will. There's a lot of anti-development kind of sentiment. They're thinking that development actually moves a lot of people out of their communities, which arguably is the case. But without more units, it's tough to. You can't, if you just put a cap on rents. The demand is still there, and there's whenever you cap, whenever you set up a ceiling on how much you can charge, you're going to inevitably have shortages. Mm-hmm. So the question is, how do you solve that? It's usually through more housing.
Wow.
So,
well, the funny thing is we're constantly lacking housing, and it's just so crazy out in LA right now. I don't know if you guys are not in LA. It's the homeless situation is insane.
Yeah.
It's so bad right now. And what do you think that the city can do about this whole situation? Yeah. Just housing in general is like difficult for anyone in a major city like SF, LA, New York. Have you seen that the city do anything or have any plans to house more people?
So the city passed Measure Triple H, I think, in 2016, and that raised like 500 million, or it was a lot of money. I can't remember the exact amount, but it was to build homeless housing, and it didn't quite work out so well. I don't know. It must have produced maybe a few hundred units at the most. There was a project, I think, in Koreatown where it was a small, maybe I can't remember the unit count off the top of my head, but I do remember the unit cost was somewhere around $700,000 a door, because land's really expensive in Koreatown, and building a high-rise building is also very expensive because it still requires the same components as if you built a luxury product. Mm-hmm. So at that type of cost per door, and you have 50, I think the last statistic I read was around 50,000 homeless in Los Angeles. The numbers would be staggering to be able to house all of them at that type of pricing. So there's no silver bullet, in my opinion, to be able to house all the homeless in Los Angeles. It's going to require a huge comprehensive plan for the city, because first, if you add housing to the city, you need to be able to provide the infrastructure, and you need to provide the transportation without having crazy gridlock, and you provide the healthcare, right? There needs to be enough hospitals to support it, and there needs to be enough schools, and there needs to be enough police, and so you kind of need this overarching plan. And it's generally there's generally doesn't seem to be political will to do something like that these days. It's
so interesting.
Yeah.
Well, that's hopefully we can figure out a solution. It's like,
it would be nice.
Yeah, I know. It's really sad. It's definitely really sad in the city. But anyway, onto more positive things.
Sure.
Yeah. So, this is a remote work bay channel. So I did want to ask you, how it's like, working from home in this last year.
So it's no different than the past several years. I've been working remotely since 2013, actually, since I started my business. We grew our capabilities over time, and we were using all the stuff that everyone was so wowed about in 2020, like video conferencing and Slack. We had all these things beforehand. So when the pandemic hit, we looked at all of our processes at our firm, and we didn't change a single thing. Our team is remote. I had an office in downtown for a while. Nobody ever came to visit because no one likes to visit their accountants, I guess. I'll go to them, but they won't come to me. Yeah. It's just kind of a thing.
Yeah.
But we've always been remote. We have folks here in LA. They're working at home. We have folks overseas that are also working with our firm. They've been remote, and as long as you properly structure yourself with the right technology stack, you can get a lot of things done without being in an office. So it hasn't changed us at all.
Do you? I'm sorry. Did you remind me? Do you use VAs at all for your company?
No, but I use work. I do have some staff on my team that are accountants. I use CPAs, and they're based in other countries.
Got it. And how has COVID impacted them at all? No?
Well, let me back up. It's impacted all of us. But when I say has it impacted the ability to work? No, absolutely not.
Okay. Well, that's great. Well, that's great that you've been remote this whole time.
If anything, our productivity's up now because there's nothing to do. right? You can't go out. So all you do is sit home and do work and taxes and accounting all day. So from productivity perspective, we're actually doing better than ever.
Do you think that people will be able to stay as productive when the world opens up again?
No. I mean, we're going to want to go out and party and all that once all this is over. We're all flying out somewhere else.
Yeah, like, goodbye.
Yeah, we're out.
Where are you going first?
Oh, I'd probably say Mexico City. I love Mexico City,
yes.
so I can't wait.
I know, and that's like a short 2.5-hour flight from here.
Mm-hmm. But you want to be in a place where there's a lot of people. Like, I don't want to go to the beach. Like that's something we do now. Like, I want to go where like lots of people are. We can go eat.
Yes.
Have a great time. So.
Oh my gosh, I can't wait. I was just talking to a friend about Asia like a couple hours ago, and I was like, I want to go back to Asia so badly.
Mm-hmm. That's number 2. We'll fly from Mexico City straight to Asia. So
it's great to.
Yeah.
So how do you, as a business owner, so tell me, how do you divvy up, how do you give yourself vacation time? Because you could literally work yourself to death, right? Because you make your own hours, it's your business, it's your own blood and sweat. How do you divvy up your year in a normal non-COVID year?
Oh gosh. Okay. Yeah. In a normal non-COVID year, I generally before all this happened, I was pretty good at having a work-life balance.
Yeah.
So I would probably work till like 5 or 6, and then I would call it a day then, and then be social, hang out. And, you know, I love to travel as well. So I like to work, I'd go to another country, I'd work from there for a little bit, hang out. So that was fine. During these times, there's no balance. And it's just because, quite honestly, we've all had to shift our business models to meet this new crazy time. And so that took a lot of effort and a lot of energy to get up to that point. Mm-hmm. So I haven't had a balance. I've just been working straight through this past year, but I'm trying to consciously get back in there, because now you start to panic when you're doing nothing, like, I shouldn't be napping. I should be reading some more tax code. I should be reading the latest law. I should be, so that's, it's a struggle for sure.
So how are you finding, how are you rationing out free time to remind yourself to take a break?
I let the weekends sort of be my days off.
Yeah.
I try to make it my days off. I'm also balancing school as well, because I'm finishing up my master's in taxation. Mm-hmm. And so my weekends are kind of reserved for studying for the class. So, I try my best to make weekends the most fun part of the week.
Right.
I'm not always successful, but I try.
And school-wise, you were going into school, but now you're doing it all online.
Yeah. So the funny part is this program was actually designed for working professionals, because most of us, all of us in the class are at firms.
Got it.
And so they actually designed the whole thing to be on Zoom before the pandemic started. So there was no transition required. We were just carrying on. It was very, very lucky.
I mean, that's great, because it's they didn't have to do anything. They're like, all right,
they're like, just keep doing what we were doing. Yeah.
How is it, because I have not been in school in COVID times or gone to school online. Is it different? Is it difficult, to do school online? Or is it something that you enjoy?
For me, no. Because I like to self-study, and the program was designed for you to kind of study on your own, then show up to class and then ask questions and have a discussion about what you learned. So for me, that type of format works really well. But I know some people who would like to be like in front of a lecturer, actually physically talking, and I know that they would probably not enjoy the program as much.
Wow. Yeah. So, okay. So how do people find you? How do people find you? What type of services do you offer in your business? How can I help you?
Oh, okay. Well, so we are usually found through a combination of referrals, because people like to refer their accountants out. And then we also use some search marketing as well, such as like Yelp and Google and stuff like that as well. So those are the 2 primary sources that I get most of my business. And I think most service-based businesses kind of get in that direction. Yeah. That's, I guess, that's how they find us. We've been online.
Are you on all social media sites and everything? What's your?
We are.
We
use we use at morrisadvisors for our Instagram handle. We have not found Instagram to be that helpful for our business, because usually when people are on Instagram, they're looking at like more interesting things than tax code, right? They want to see like the latest model.
Sponsored post.
Yeah.
It's like shoes and taxes.
Yeah. Yeah. They want to see cooler things, more visually appealing things than me with like a little like tax code image like right here saying, don't you want to know more about 199 cap A, but
Hey, but you know what? Around tax season, you never know.
yeah, I mean, well, we posted around tax season, still nobody wanted to see it. It was one of those.
Interesting.
Yeah.
That's really, really interesting. So
Yeah.
where do you, so it's just mostly referrals at this point?
Referrals and Yelp. Like a lot of folks like to see us on Yelp. We have very good reviews on Yelp. And so like we get a lot of traction that way.
Are you swamped with tax season yet? Like what is your busiest season? Like right now, isn't it? Or
no, we're busy year round, but we don't have a crazy tax season like maybe other accountants do because we don't push out as much volume. So there might be some folks who are CPAs who do like 2,000 tax returns in a year, right? And so they're just working 15 hours a day and loving life, as I'd say. We have a smaller volume of clients because we're much more advisory, like strategic advisory focused. And so, we'll have a smaller pool of clients who we interact with throughout the year. So we're constantly chiming in, giving advice, and we're planning out the whole year. And so by the time tax season rolls around, we already know what the tax is going to be. We know what the tax return is going to be like. It's not the first time we're interacting with them in a year, right? We've talked to them throughout the year already at that point.
Got it.
Yeah.
So it seems like it's that's more of a balance.
Oh yeah.
A lot of my friends that do our tax accountants, they're crazy slammed like in April.
Yeah, because you're spending most of your time like gathering information, and then like you get clients who are like not that focused on the process because they don't enjoy doing taxes. So they give you like a little sliver of information, then you like follow up, and they give you like another sliver, and then follow up. Like, okay, we're done, and then you do the return, and they're like, wait, I forgot to give you like 3 more slivers of information. And so you're constantly battling back and forth, getting all this information. The return itself is not that hard. It's just getting everything together first, which is typically the most labor intensive part of it.
Yeah, you're right. I'm one of those great clients. As soon as I get like a 1099 or whatever it is, I'm like forward, picture forward. I'm like, I don't have to think about it again. I'm just like, I'm going to lose this piece of paper if and I don't want you scrambling and like asking me for information. And
for sure.
Yeah. But so anyway, I will put all of your contact information at the bottom of this video so people can contact you, find you, ask you more tax and real estate information, investment, information. So thank you so much. I mean,
my pleasure. Thanks so much for having me.
And I really appreciate you doing this.
Of course. Thank you.